Welcome everyone back to another real estate market talk and with my partner Jeff Kalafut. And today we have Kevin Dolan from Mac Home Mortgage, and we have Joe Valenti from Tabachak Law. Welcome, gentlemen. Thank you for joining us.
Good morning.
Hey. Good morning.
Jeff, the coffee hasn't hit yet, has it?
It has not.
Awesome. Well, like always, guys, we are here to give you guys perspective on a professional perspective of what's going on in the market, and kind of so we can put ourselves in your shoes and kind of figure out what your next move should be, if any, in today's market. Kind of talk about where it is now, where we think it's going, and what are some of the hurdles that we are crossing in today's market. So with that said, Kev, do you want to kind of give us some insight of what's going on with rates, what's going on, currently and potentially in the future, and what you're seeing?
Yeah, sure. Thank you. Thank you for having me on today, and happy to share. So, yeah, finally some good news in the rate market. The last 2 weeks, we've seen a decent rally, kind of a term we use when the market is being favorable each day, and based off of the inflation reports from October. So most people hear the term CPI, which is a consumer price index, which, as a consumer, you kind of see all this media hype around the Fed meeting, and really that's what we're following, right? We're following inflation. Inflation needs to down for mortgage rates to come down. And so, like I said, the good news was that market kind of priced in where they thought inflation was going to be, and the numbers came in below what was estimated. So what that does is cause a little bit of rally. I think, if you're watching Wall Street as well, you saw that had some really good days there too. So what that really was, we brought rates kind of came down into the lower sevens where they were in the higher sevens. So that was a pretty drastic move in a decrease in rates over a short amount of time, which definitely sparks some optimism as to where things are going, because we've been kind of seeing the economy remain resilient. And, unfortunately, when you're a home buyer and a mortgage participant right now, you have to kind of bet against the economy. You want the economy to get sluggish, and we want things to start to slow down, because that's what ultimately will bring inflation down, which subsequently brings mortgage rates down. So we're starting to see that now. All that activity that the Fed has put into increasing rates was designed to slow inflation down, and so now we're definitely starting to see that happen.
Right.
And, turn of this year, we definitely expect rates to continue to drop.
What are you predicting for next year, Kev? What are you thinking is going to happen based on what we're seeing today?
Yeah, so it's a good question. In fact, most of the big forecasters and players in the industry have revised this, not for the better, but unfortunately, it's been revised to have rates probably not get below 6% in 2024. However, the amount of people that have bought homes in the high mid sevens over the last 24 months, it's still very, there's a lot of people there. So that does not stop the refinance activity from happening, does not stop the common goal, the whole date to rate, marry the, all that stuff that's been out there. That still remains to be, something that is a strategy, because activity will definitely start to take place probably in Q3 and Q4 of next year. We'll see a lot of opportunity there. And I think a lot of people are going to refinance twice, quite frankly, because you're going to see sort of like us go down one level and potentially the next year go down another level. And, those opportunities to lower your rate will come. And, but yeah, I think most forecasts now remain that rates will remain over 6% through 2024, but still a good decrease from where we are today.
Absolutely. For sure. Yeah, I mean, you mentioned inflation. As of today, we're at a 3.2% inflation rate, right around there. And we have to, Kev, do you think that we need, is that correct? Are we around a 3.2 as of today?
Yeah, and the goal is really the Fed's been very, hawkish and very, big on the goal of 2%. And they want to be, and that's where they're going to try to get. And that's what the sort of speculation is, if they're going to need to, we're likely not going to see another decrease. But the question is, when are we going to start to see any decreases? Is kind of left to be seen.
Right. I hear you. Very interesting. Joe, what do you see in transactional wise? Do you see, obviously we're still having multiple offer situations. They're seeing transactions come across. Do you, in the city and in New Jersey, any, what are you seeing in regards to that?
Yeah, I mean, in New Jersey, you're seeing a lot of friction at the home inspection phase of the deal.
Mm,
I've never seen anything like this, to be honest. And doing this for a dozen years, it's been the most difficult home inspection negotiation phase I've seen. So you do have some deals where they're being waived or limited,
yeah.
but even in the limited ones, I think buyers are just feeling like, at the rates where they are higher. Yes, Kevin mentioned they came down, but they're still high comparatively speaking of last 2 years. And the fact that, despite these high rates, you don't have the quote unquote discount on the home buying process, which you usually see correlated with increased rates.
Hmm.
They feel like they want something from the transaction, right?
Right.
So they're paying a premium, the rates are higher, they're quote unquote limiting inspection language, but then when the inspection report comes back, they still want the moon,
Right.
sun, and stars.
Yep.
So there's definitely a lot of deals that are being terminated in the home inspection phase at a crazy rate, to be honest.
So do you think, I mean, I guess when, some buyers are kind of burnt out and they've, put offers on multiple
Yep.
houses, it's almost like, hey, let's just get our foot in the door.
Yeah.
Maybe we'll just throw a ridiculous offer out, get it across the table, and then work backwards from there.
Yeah, there's been that for sure. Clients saying, that don't think their offer is going to get accepted type of offer, which is a lot different than we love this house. This is our dream house. Let's go for it. You're
Yeah,
more willing to bend in that situation.
correct.
Whereas, you put in 3 offers, you get one of them and you're like, oh, wow, I wasn't expecting this. And now you're working backwards, like you said. So
Yeah.
there's
Uh,
definitely a lot of that. So, it's cyclical, I feel like in New Jersey in terms of, what ties a deal up. And right now it seems to be home inspections.
yeah, for sure. Jeff, what are you seeing transactional wise? What are you seeing, offers wise on listings? What's the traffic look like on some of your listings going on right now? And also what are you hearing out there?
So one of my latest listings in Mount Olive, we had about 20 showings and over 20 groups at an open house within a period of like 3 days.
Mhm.
Right now we're doing a best and final. I mean, the first offers came in, they were strong. Price point of this property is listed just under 500,000, and I feel like people are being aggressive, but because of the rates, they're not being as aggressive as they were being before. If that makes any sense. Like, when the rates were a little bit lower, people are willing to throw 40, 50, 60 grand above on something and waive that appraisal gap. Now with the rates a little higher, they're not willing to go quite as high, but I'm seeing numbers on this one. Obviously can't talk about the numbers itself, but I'm seeing numbers that my clients are very happy with, and terms that people are very happy with. Not everybody's addressing appraisal, which in the past with a multiple offer scenario, you see that at least some type of verbiage in the contract and the offers. Not everybody's addressing inspections as far as, limiting or waiving anything. But we do have some, and the strongest offers that we have right now are addressing all of those things. So those three factors, it's always that package, right? The offer price, what are they doing for appraisal gap coverage, and what are they doing for inspections? I mean, that's really what it comes down to in any transaction, but especially right now in a multiple offer scenario.
Right.
I expect to have 10 to 12 offers total on this property by the end of the day today.
Yeah.
And, it's not going to be an easy decision. I have some really strong buyers, which just tells me right now, I mean, in Mount Olive, there's, I think, 17 homes on the market. I'm going to have probably a dozen offers on this property in that price point. That's another 11 people out there at least that aren't going to get this house.
Yep.
And need a property in this area in that price point. Inventory is killing us still. So even despite the rates, the prices are going up. I will probably be one of the, if not the highest sale price in that neighborhood. So it's pretty wild.
Yeah. I mean, also speaking to that, in Mount Olive, lower price point, we had 60 people come through the door with 13 offers.
Right.
So no interest rate, no, trying to get inflation down is going to change the amount of volume of people looking to, to buy a house. And Kev, I want to touch base on this. Do the Fed opened up this whole mental multi-generational housing, right? The 5% FHA or owner occupied. Do you think that is the way the industry is trying to combat low volume, is trying to get multi-generational homes to people, try to make it more affordable so they can try to help the inventory shortage or anything like that?
Yeah, I mean, the one thing that a lot of folks don't realize from the inventory shortage is that 70% of Americans have an interest rate below 4%. So, there has been a lot of movement in the sections that you've just mentioned, and also we're starting to see even like Fannie Mae, for example, just released this month. Now you can put 5% down on a multifamily house. So we're starting some expansion of flexibility in mortgage programs as well. But ultimately, once rates do get to a certain, lower place, I do think that inventory, shortage does start to change a little bit. If you just simply say it, right? I mean, you're not going to go jump out of your house to put a for sale sign on it, when you have a 3.5% rate to go into this current market. And, you hear all the war stories that are out there. So people are sort of waiting, right? I mean, it's not someone the buyer demand isn't down. I mean, in fact, year over year in New Jersey, just pulled some stats this morning, 10.7% year over year, home prices are up. Home sales were down 15% year over year, and the median days on the market is down 10 days to 36 days on the market. So, that does show that people are still willing to pay, people are still to buy, and they're buying quicker by 10 days from last year. And we're in a higher rate market today. So buyer demand is not a problem. Obviously, you guys are just painting the same picture with how many people are still out there, to want to buy. I think the movement in inventory, oddly enough, has a lot to do with these rates coming down as well. I mean, where that sweet spot is, I would love to know myself, but maybe in that 6%, 5.5% rate. That's a real normal housing market rate. Historically, over the course of time, it's actually still a very low rate. But it's like anything else. You put these anomaly years of low rates next to rates in the sevens, it feels like it's much higher, even though historically the rates are still low. But a normal market in the 5 to 6% range will probably correct that inventory pretty well, I think. To be honest with you.
Yeah.
That's the golden question, right? We talk about it every time we have this podcast. So it's like, what's that number going to need to be for everybody to start putting their houses up for sale? Because we know that's the issue right now.
Yeah.
Nobody wants to climb
I think when we hit those high sevens, that's when things came to almost like a screeching halt temporarily too. Like everybody paused. A lot of our buyers paused, listings paused. There was not many people through houses for like a 1 or 2 week period. And then when they tick down again, I feel it kicked back up again. So I think Kevin's right. When it gets down to those, we get just below 6, I think things are going to start popping off again.
Yeah, it's setting up for, there's going to be some period of time where that number is sweet enough for everybody. There's going to be an absolute crazy sell-off by sellers, and you're going to have a lot of two-deal situations with selling and buying like we had in 2020 and 2021.
Yeah.
And it's going to be chaos when that happens. But until then, we're kind of in this holding pattern,
Yeah.
And deals will come and go as rates, vary a little bit. But
right. Real estate's always going to be bought and sold. No matter what the market, no matter what the environment, there's always real estate being sold. It's just a matter of what's gonna help, juice up the market a little bit, and what's gonna cause the rates to come back down. We're going into an election year. Right. We have a lot of different things that we can't control. Nobody here, at least on this, podcast, can control. But
what are you saying, Jeff?
It's gonna get interesting.
Yeah, I think
that I saw the other day. Which really got the hamster running on the wheel, that the average age of a home in the United States is 40. That's interesting to kind of put into the conversation because, a house that's 40 years old, if it has not been renovated, if it hasn't had updates to, the main, systems in the house, there's a lot to be said about how that can motivate a seller or a buyer. Obviously people are either going to need to take advantage of the equity that they had, this newfound equity, and do renovations on their house, or start to take out loans on their home to update them. Or obviously the potential for someone to say, hey, we're going to need to go buy because this house is getting older. So I think that could be a motivator as well to some inventory because of the age of homes that are on average here.
Right. I don't think any of us, I think it's like almost like a perfect storm, because too is like, even though, inventory is kind of pausing things from happening, the amount of buyers that are still coming in to the market year over year from people, coming out of college, that hasn't stopped. That backlog is still happening in the background. So what is the threshold of even the interest rates do come down, but still, like, what is the threshold of inventory to even make that number of people wanting homes in this area or in the United States even like a neutral or even fairly balanced? Like we're on backlog for a couple of years now still of people coming out of their parents' basement ready to rock and roll. So
it's going to take years to correct this, and there's going to be a lot more gray in this by the time we get there.
I'm hoping the hair grows on top of my head.
Yeah. Whoever can in this field, whether you're a broker, an attorney, a mortgage person, a title person, those that can withstand what's going on now are going to reap the benefits when that time comes. So
absolutely.
That's kind of what's going on.
You got to weather the storm.
Yeah.
So, just kind of recapping, obviously inflation is still up, still looking to come down. Interest rates are coming down. Inventory is still, obviously an issue. Appreciation rate might have paused, not paused. It's still creeping, but it's not as how it was crazy a couple months back. So, seasonality, people always ask, I got another listing coming on. People are like, hey, is this still a good time to put my house on the market? And I was like, I just had 60 people through the house just the other day. So, I mean, I think
that's out the door right now.
Yeah.
If you're ready to sell, put it on the market. You're going to get top dollar even during this period when it's typically the downtime for us.
Right. And honestly, I guarantee the strong players in this game who are ready to buy are hoping that people go sit on the sideline so they can scoop something up in the meantime.
100%.
So, so like if people are out there during the holidays looking, they're serious. So, which we always want serious people who are, going to make decisions. So, anyone else want to add anything right now, or do you think we covered most of the stuff?
I think that's it. Other than it'll be interesting to see, if you remember last year, what February, late January, February looked like. It was scary. My email is never quiet, but it was definitely more quiet those months last year. So you always have the holiday slowdown, but last year was like elevated levels. So it'll be interesting to see this year. I expect more activity than last year, but
I do too. I last year it was scary, Joe. I mean, going into quarter one, everybody who has these standards and these numbers they want to achieve, and nobody was anywhere close. I mean, you could hear crickets sometimes. Like, okay, is my phone going to ring today? I'm going to call people, but are they going to be interactive? Is it going to work? And then all of a sudden, as it pushed forward through spring, things just picked up again and just kept going.
If you called me, Jeff, I probably wouldn't answer you.
Yeah, that's a good point. We don't have the unknown as much as we did last Q1. Is people were just like, oh my, what's going on? We know what's going to happen. Rates they're going to rise a little bit. They're going to come down a little bit. They're probably, like Kevin said, he outlined that. I'm not going to get into that again, but it'll be interesting. I think it'll be a little more steady. Everybody has their bear.
I agree with that.
Interesting. I think something interesting I'm really looking forward to seeing is and not in a good way for folks that are not going to make the cut in our industry. I don't think that's obviously wish harm on anyone in that sense for their career, but I think that the amount of licensed individuals both in real estate and mortgage origination are going to have a significant decrease as we go from December to January. So those that do hang on, like Joe was just saying, that market share is just going to start, you have that natural increase to market share that will be available to all of us that do hang in there and, that weather that storm. And, hopefully it's not as cold as the winter as we'd like. It could be. Farmers already saying Dumped out was
Hopefully Santa brings some coal to keep the fire going, right?
but yeah, I mean, from for any industry people that are listening to us this morning, you know, that's a motivator for me anyway. Is that, you know, there's gonna be less people doing the same thing around you, and you know, those strong five and the mainstays and the people that really focus on the right things, you know, we'll see better days ahead for sure.
Absolutely.
Focus on skill and knowledge, and just keep adding value, for sure.
That's it.
Well said.
All right, gentlemen. Well, thank you for joining us today, and hope you guys have a great Thanksgiving. And we'll see everybody on the next one.
Yeah, thank you so
Sure,
much.
guys. Everyone be safe. Happy holidays.
Take care, guys.
Take care.